Welcome back to another episode of Stock Talk. If you guys are new to my channel, my name is Julie, so welcome. Today I want to go over some dividend stocks that are deeply discounted. So a lot of people are afraid to purchase stocks when they have taken a dive, but that's actually the perfect timing for you guys to start collecting the stocks that you guys want to hold in your long-term portfolio, especially if they are paying dividends. So I have 9 dividend stocks that I want to go over, and I'm going to go over in the list from the lowest yield to the highest yield, and I will also go over their PE rating and let you know where they're sitting on my daily chart. So the first stock I have for you guys is Leidos. Now Leidos is a company that engages in the provision of scientific, engineering, and information technology services and solution in the areas of defense, intelligence, civil, and health markets. So the company was established in 1969 and it has its headquarters in Reston, Virginia. So first I want to take a look at the dividends. So let me pull over tip ranks, and that's typically what I take a look at. So we can see that they're paying a dividend yield of 1.57, which equates to 36 cents a quarter per share. And the payout ratio is really low. It's just under 21%. So that's fantastic. And the analysts are giving it a strong rating. And we have a 5-year growth history as well. Then what I also like to take a look at is the PE ratio. And let me for that pull over Seeking Alpha. So on here we can see that the PE non-GAAP is a B+, currently sitting at a PE of 13.33, which the sector median is 19.72. So if you have a company whose PE is much lower than the median sector, then that's actually fantastic. So that's definitely a great sign for you to purchase the stock. Now let's take a look at the chart, and as always I'm on the 3-year chart because I mentioned in my videos before, with the last 2 years and this really insane bull run, I feel like a lot of companies have just grown way too much, way too fast. So I feel like it's best to take a look at a wider picture. So looking at the 3-year chart, we can see that Leidos is sitting on the 200-day moving average. So this is definitely a nice area if you guys wanted to pick up a good paying dividend stock. So my next stock on the list is Intel. And Intel, for those that are not familiar with Intel, manufactures and sells microprocessors, chipsets, flash memory, as well as other products and platforms for compute, storage, network, and other functions. So Intel also pays a nice dividend. The yield is 2.93 annually, which equates to 36 cents quarterly, and it has a dividend growth for the last 13 years. Now, currently it does have a hold rating. However, if we take a look at Intel's PE ratio, so we can see it actually has an A+. So the sector median is at 22 and Intel is only at 8.78. So I really like this low PE ratio because it says there's a lot of growth for the company. Now, taking a look at the chart, we can also see that Intel is currently sitting on the 300-day moving average. Now, of course, it doesn't mean it's not going to fall any lower, but this is definitely a great entry if you guys are looking for a long-term stock in your portfolio that pays a decent dividend. So sitting on a 300-day moving average is definitely a really nice area to start a position if you guys are not already in Intel. Now, my third stock on the list is Robinson Worldwide. And Robinson Worldwide engages in the provision of freight transportation services and logistics solution. It was established in 1905 and has its headquarters in Eden Prairie, Minnesota. Now, looking at the chart right away, we can see it's sitting on the 200-day moving average. Now, looking on the longer chart, we can see it's kind of been consolidating mostly. Then we had this drop during COVID and had made a nice recovery. And the analysts are actually giving it a moderate buy with a price target of $107, which equates to a 20% upside potential. Now, the annual yield for this stock is 2.34, which equates to 55 cents quarterly, and we have a 13-year history in their dividend growth. So that I like as well. And we can see on the PE, it has a B+ rating. So we are sitting at 14, and the sector median is almost at 20. So again, it's a really nice PE ratio in comparison to its sector median. The next stock on my list is Medtronic. Now, Medtronic was founded in 1949 and is actually a medical technology company which develops, manufactures, distributes, and sells device-based medical therapies and services worldwide. So it actually operates in 4 segments, including cardiac and vascular group, and Minimally Invasive Technologies Group, Restorative Therapies Group, and Diabetes Group. So the company is actually headquartered in Dublin, Ireland. And looking at the chart, let me actually just pull that up for you guys. We can see it's actually right now bouncing between the 200 and the 300-day moving average. So that's definitely a nice spot to take advantage of if you guys are looking for a great company that pays dividend. And speaking of the dividends, it actually pays an annual dividend yield of 2.4%, and we can see that it has a 13-year history growth and a moderate buy rating. And if we take a look at the annual forecast, the forecast says $128, which is almost a 26% upside potential from here. Now let's take a look at the PE ratio. So in the PE ratio, we can see that it has a B minus, so it's very close to the sector medium of almost 21, sitting at 18.6, but nevertheless, it's still lower than its sector medium, so that's also something to take in consideration of. My fifth stock today is going to be Best Buy, and the ticker for that is BBY. Now, Best Buy, as you can see, is hovering over the 200-day moving average, currently sitting at $97. The analysts are giving it a median price target of $132, which is over 35% upside potential from here. And the annual dividend is at 2.89 a year, so that equates to 70 cents quarterly. And we can see we have a 6 years growth history with a moderate buy. Now looking at the PE ratio, let me pull it over for you guys. We are at 8.99 with a sector medium of 12.6. So again, we are well below the sector medium and we got a rating of B. So again, this is a really nice stock that you could purchase for the long-term hold. Also, we can see if we take a look to the left, that it looks like over here, this is where we had previous resistance and we could be forming support right in this area around the $93, $94 range. So again, that's why this is a really good stock in my opinion. But as always, you have to, of course, do your own research on any of the stocks that I give you guys today. So before I move on to my next stock, let me know what you guys think about my selection so far, whether you agree or don't agree, or if you guys have any questions. So let me know in the comments below. My sixth stock is Franklin Resources. And Franklin Resources is a holding company which engages in the provision of investment management and related services. The company was established in 1947 and has its headquarters in San Mateo, California. Now they are paying an annual dividend of 3.63, which equates to 29 cents quarterly, and we can see there was a dividend growth of 4 years. They currently do have a hold rating. However, if we take a look at the chart, we can see, yes, it's been a little bit consolidating. It looks like it's trading between $29 and $36. However, with a nice dividend yield, I think you would be fine, especially if you're holding this for the long term. Additionally, let's take a look at the PE ratio. So we can see this has an A rating. It's currently 7.61 and the sector medium is 11.28. So we are well below the sector medium. All right, you guys, I have 3 more stocks for you guys to take a look at. And my next stock is Edison International, and the ticker symbol for that is EIX. And Edison International was actually established in 1886 and is a renewable energy company which through its subsidiaries generates and distributes electric power and invests in energy services and technologies. So the dividend is paid quarterly as well, as we saw with all the others, and it actually has a yield of 4.39%, which is 70 cents a quarter. We see we have 13 years of growth history and it's a moderate buy. And they are giving the stock a median price target of $71, which represents almost 16% upside potential from here. Looking at the PE, we can see that we have an A grading and we are sitting at 13.27, which is much lower than the sector median of 1977. So again, great PE ratio. And taking a look at the chart, we can see that this is also one of the stocks that has been trading sideways for quite some time and then has broken out and has made new highs since the coronavirus hit, which was $68, and we're currently sitting at $61. Now we could see the stock possibly drop down to maybe the $54 area. But again, if you're purchasing this stock for long term as a dividend stock, then I think you would be okay to start a position right in this area. And again, if the stock does drop a little bit, then it would be a great opportunity for you guys to actually add to your position. The 8th stock on my list is Verizon. So Verizon right now, we can see that it was on a nice uptrend, and then when Corona hit, it made a dive down to $48. It has since recovered, but recently has been on a downtrend, but it looks like it's starting to find support over here, and it's going in the upward movement direction. We currently sitting at $53, so we're not sitting on any moving average. As we can see, we're actually below the 300-day moving average. However, Verizon does pay a dividend yield of 4.75. So let me just pull it up for you guys. So we can see it pays a 4.75 dividend yield, which is which is 64 cents quarterly. And we have a payout ratio of 46%. And we have a dividend growth of 12 years with a moderate buy. And I believe their price target is going to be, actually, let me just take a look right here. Yes, a $60. So that's a 14% upside potential for Verizon. Now the PE ratio has an A- rating, which is 9.87, and the sector medium is actually at 15. So we have a really low PE ratio. So again, that's something fantastic to look for when you are looking at the overall value of a company. So again, this is the time right now for you guys to pick up some really great stocks that are discounted. Don't be afraid to enter a stock. You have to, of course, make sure that you know what you're purchasing. Take a look at the fundamentals of the company. Make sure that it checks off all your boxes for your requirements for the stocks that you guys want to own. All right, so the last stock on my list is Iron Mountain, and the ticker symbol for that is IRM. Now looking at the chart, we are sitting on the 50-day moving average, and we can see prior to the pandemic, it was kind of trading sideways, which is very common for stocks, especially dividend paying stocks. And then it did drop down all the way to $21. It made ever since a really nice recovery and actually has made new highs since the pandemic. So Iron Mountain engages in the provision of storage and information management solution. It operates through the following business segments: North American Records Information Management business, North American Data Management business, Western European business, other international business, global data center business, and corporate and other businesses. The company was established in 1951 and has its headquarters in Boston, Massachusetts. Now, the dividend yield for the stock is 5.42%, which is 62 cents quarterly. And we see we have a 7-year growth history and a moderate buy rating. And we currently have a price target of $54, so that gives you roughly about 19% upside potential. And then taking a look at the P ratio, we can see we have a B rating. It's sitting at 32.83 versus the sector medium at 42.14. All right, you guys. So this is all I have for you today. I hope you guys got something out of this video. Again, if you guys like any of these stocks or don't like any of these stocks, let me know in the comment below. I'd be interested to find out which stocks you guys are going to be adding to your watch list and possibly purchasing. And as always, be sure to do your own research on any of these stocks and don't just blindly purchase them. If you got anything out of this video, be sure to hit the like button, of course. And don't forget to subscribe to my channel. And I look forward to seeing you guys in my next video. Until then, bye-bye.